early and to take a flight to come here. So we are a bit late towards the schedule because I should have done my introduction 10 minutes ago. So I'll go quickly and then I'll leave a word to Cosimo. Basically, this is the program of the day. It's the same that I've sent to you a few weeks ago. In the morning, we will have two case studies of two entrepreneurs that scale their company internationally and raise money internationally. And then we will talk about something that we know it's very important for you after raising money, which is recruiting talents. And we'll have Badenoch and Clara Ottavio doing a nice presentation about this. And then to finish the program of the morning, I will take you through the event, and specifically I will talk about the pitch and the presentation that we are going to prepare in the next weeks and what's behind it. While in the afternoon, after lunch, we will have our friends from Global Scaling Academy bringing you a flavor of what means blitz scaling. And it will take most of the afternoon, and then we'll finish with an interesting presentation from our partners from Amazon, talking about innovation and scaling a big company. So I think we can start. Then in relation to the various speakers, it's really up to you if you want to have questions during your presentation or at the end, but the structure of the day is done to have as much interaction as possible. And we do this, as you know, 1 month before, because there are lots of strategic things to think about. So it's this day should be for you a stimulus to think about these aspects and do what you need to do to come in 3 weeks' time and be prepared to face international VC funds to raise a big round. So I'll leave the word to Cosimo Palmisano from Decisyon, which will take you through his story. Thanks, Cosimo, for coming this year too. You were last year. You had a great success in presentation, and so we thought it would be a good idea to have you back this year too.
Okay, perfect. Thanks for you. Okay, so let me introduce myself before. So I'm going to speak about Decisyon today, even if I started my first startup in 2009 when I was a Fulbright Best Scholar in California, and I started my first startup. It was in the social CRM field. So it still exists. There is still the technology. Has been basically acquired 6 years ago by Decisyon, my actual company. And what I'm going to tell you, the story about how an Italian company based in Latina close by Rome, has been able to raise money in US. It was very tough, was difficult, it's still tough. There are a lot of cultural issues to be overcome. But it is fun. So how can I switch slides? You have to do it?
Yes.
Okay, next.
So far, we are solving the problem.
Okay, so let me tell something about the Decisyon. So Decisyon is based in Latina. So all the software development is in Latina. The reason why we are in Latina is because the former entrepreneur, the first founder of Decisyon, basically started a software technology around the pharmaceutical world. Latina, for different political reasons, is a place where there are a lot of manufacturing plants and pharmaceuticals. So we started there, and I entered Decisyon later on. We raised $50 million by US investors. That is a nice story. We have our headquarters in San Francisco. At the beginning, our headquarters was on the East Coast because our US investors were from Connecticut. But now we are in San Francisco for different reasons, because we are working with a lot of technological multinational companies there, in particular GE, General Electric, We have 20,000 users, so we do B2B software in the field of manufacturing 4.0, industry 4.0, whatever you want to call it. Basically, we allow people to decide better in very complex manufacturing environments, taking data from the IoT, the Internet of Things, taking data from the legacy system, and collaborate around information coming in real time from all those fields. We work in 200 plants, and this is the list of partners we are working with. So AWS, Amazon Web Service, is one of our historical partners. So we are consolidating now our partnership with AWS because there is a new stream on Manufacturing 4.0 that is also one of the pillars of AWS offering. GE Predix. Predix is the platform that GE has created in order to jump from the physical world to the software world. So Predix is the big data platform that is used by GE partners to create software application, for example, for managing jet engines or turbines in oil and gas applications. Next, please. So I'll skip this, but in general, our positioning is I think I tried to explain it a bit better before. So we are a software company. We create applications for manufacturing, and our intellectual property, the most important piece of technology we have is our in-context collaboration capability that allows people to collaborate in real time around real data. And as you can see, the list of some of the customers we are targeting big multinational companies. So, for example, in Johnson & Johnson, we are working for 25 plants. So our software is installed in 25 plants around the globe. So, to be honest with you, I don't have a clear definition about scaling up. So I don't know where is the threshold between you are a startup, you are scale up. So I tried to understand in my soul why we decided to scale up. In my view of the world, of the startup world, scaling up means that you are not able to do the same things that you're doing because you're growing too fast, and you're not able to do exactly what you want to do, that you're perceiving that the market wants. So those are the reasons we decided to scale up. And for us, scale up, when we decided to scale up, we decided to go in US and raise money in US. So first of all, we were very conscious of having a very good technology. We have seen a lot of big customers using it. Second, some customers were asking to scale the application all over the world. So Johnson & Johnson, we were working in Pomezia, in a small place close by Rome that was very close to our offices. And the IT manager worldwide said, you know what, this is a great application. Let's scale it worldwide. So how I can do it in India, in Brazil, in South Africa. Then a lot of US competitors were pushing in the market a lot of new features, and we were not able to couple this velocity, this speed. The fourth point, create a multinational company. This was, in my opinion, the Franco's opinion, also the other co-founders, the basic idea. So we don't want to be an Italian interesting company. We want to be a global company. And so this was one of the reasons we decided to scale up. Last but not least, in some cases, we were not able to manage some very good opportunities. So someone was saying, you know what, I want to do this, this, and this, but we were not able even to allocate people for doing an activity because there were too many services to associate with that. So we were blocking the growth. And so, okay, let's get money, let's invest, let's start the process. So now you will see a lot of slides. There is no an agenda. There are some, I'm throwing some quotes, some experiences that you will find interesting, and probably are some suggestions that you can follow or you cannot, please. So first of all, don't be shy. Italians can do it better. So it's fun. But for example, in manufacturing, we have a very good picture. So in the world, they perceive us as a very good in manufacturing, despite the luxury stuff and the fashion stuff. In mechanical electronics, they perceive us as a very good. So don't be shy. Even if you are Italian, you're going to raise money in France, in US, believe in your technology and believe in what we are able to do, we have assets, we have different things we can do very good, in particular in the IoT field. In manufacturing, we can see that sometimes we're even better on the US because manufacturing is not exactly their core in this moment. Please. Another good thing that worked a lot, particularly with investors, was this, that we were a very small company getting very big companies as a customer. So this always works. So sometimes you can decide to invest, growing your company to get 100 small companies. In some cases, you have to decide and focus on big corporation, because the big corporation, when an investor look at your pipeline and see, okay, Johnson & Johnson, Sandoz, whatever, Pfizer, okay, they say, here there is an opportunity. If 5 guys in Latina have been able to catch those customers, those big customers, imagine what 10, 15, 50 sales guys can do all over the world. So the scaling capabilities. Another very important point was this. So they have seen the investors. I like a lot this image. I always show it in US. This was, I think, the only time that the US lost against Trinidad, because they lost the baton they were running. So they were not coordinated very fast, the fastest guys in the world, but they lost because Trinidad and Tobago went very fast and they coordinated very well. So we have always shown to the investors that we were coordinated, motivated by one single thing: make money, help them make money, and be a global company. Please. So the team. Okay, other positive aspects. I know that is sad, but if you hire people in Latina and if you hire people in Palo Alto, there is a lot of differences in respect of their salary, in respect of the fact that there is a lot of turnover, because they go back, they go to the other door and they can start working in another place. In reality, what the investor liked a lot, that with very low cost, we would be able to manage something that was a sort of a small multinational company with big customers. So if you're able to show that you have small expenses, you have good technology, and you have hired very big customers, as I mentioned before, and you hired very talented people at a low price, this is what happens normally in Italy, in particular in some places in the south of Italy. This is a very good aspect that everyone likes, despite it's from US or from England, whatever. So low cost hero, please. Another important point. So whenever you are going to pitch to your investor, another thing that I thought was very helpful was to show the scalability of the process. So I remember one day we were discussing with our sales guy in well, it was the senior sales in US, and we had a very young guy in Italy trying to sell. He was not able to sell for 2 years, and we were thinking to fire him. He said, "No, you don't have to fire him, because this is the most important test you have in your company. If he will be able to sell, everyone will be able to sell. So wait till he will start selling. When he will start selling, it means that your product is simple enough to be understood by everyone, and so everyone can buy and can sell, and so you can scale." So always try to figure out ways to make the sales process fast, reduce the lifetime, the sales life cycle, and make it as simple as possible in terms of technology, in terms of modules, in terms of commercial aspects also. I sit in different investment groups and investment committee, and most of the time when I finish the presentation, I always think there is something missing. And the thing that is always missing, 99% of the time, is a pipeline. So, okay, you have 200 customers, tell me what is the pipeline, tell me how much you are projecting to grow, and what are the names of the companies you are pointing in the next 18 months, 24 months. So building a pipeline, sales pipeline, is the key. Of course, for a B2B software company is the key. If you're in the B2C world, probably is not so determinant, but I'm sure you can show something that makes the investor think about the future, the potential you have. But building a pipeline, for example, in our case, what we did, we tried to scale our pipeline outside Italy, also using actual customers. And then we jumped in a flight every 3 weeks to go to US to build a pipeline in the US, even a couple of customers. This shows something to the investors. What if they are from US or they're from UK? Anyway, having a foot in US could be very helpful. Please. Again, this is a repetition. Strong knowledge. So the investor shows all the knowledge you have, but I think this is you can skip it. This is one of the most important things. So scaling up, if you are still the CEO, after the round A, let's say, scaling up means getting money, getting a lot of money probably. So the investor most probably will ask you to step back from your CEO position and do something else, the CPO, or whatever, the Chief Operation Officer or the Chief Innovation Officer. So this is something that 80% of the time happens, but this is not an issue. Okay, so I don't think being the CEO, as long as the governance works, it's fine. So if they're not putting a CFO as the investor put a CFO to do the CEO, everything is fine. As long as you like the person, you can still work together with investors to get the CEO position, but be ready to do it. And don't be afraid about this, please. Okay, I like a lot of this image. I put it last year, it was not here, but diluted superhero or super diluted hero. So another thing that happens, you are going to get diluted because you are not investing money. Someone else is putting 15, 20 million. Of course, you cannot invest this money, or you can just invest part of it. So you can contractually try to manage this dilution, but it will happen. So you will be always the hero, but kind of diluted. But it's fine, because next slides, it's not possible to say fun. There was a small guy eating a very big piece of cake, so like this. So it's better to have a small slice of a big cake than a big slice of a small cake. It's fine, diluted or not. You are working. You are getting a small piece of a bigger part. So get used to it. Probably this is the last slide. So my aim is to finish before 11, so we get back to the normal schedule. So even if you are not ready for scaling, always ask money before you need it. Okay, don't forget it. It's even my grandfather always said it. So ask for money when you don't need it, because if you ask money when you need it, they kill you. So do it before, do it in advance, because otherwise you lose all your negotiation capabilities, and because you are scared, because you are in difficulties, investors, banks can get advantage of you. Probably this is, okay, no, this is not. So one of the big issues that we faced, because we collected money by US investors, was there was a cultural gap. So they always think about, they think in a different way. So let me give you an example. In December, it was the end of December 2014, I closed a very big deal with the customer, and I was very happy. So the CEO, that was an American guy, it was the number 2 of Dell.com. He called me the 24th of December and said, "Look, great, this is a great success. We raised, I don't know, probably 45% respect to last year, but we need to make a call the 26th of December." Okay. We start the call the 26th of December. Okay. Now the question is how we make this 500K 2 million next year by the end of June. Wow, I was still celebrating. And so this is a cultural thing. This is so sometimes you stop, you celebrate, you think you accomplish something. In US, the more you can raise the barrier, the better it is. They go. They try to grow in any case. Of course, there are also things that are negative. We have a lot of things that are negative, like celebrating for 3 weeks without doing anything because you close the contract. But managing the cultural gap you will have against your investors is not so trivial. So, next slide. So what we did for raising money, conscious of the fact that there was a lot of cultural gap, but also some misconception about the European and Italian market, we hired people to help us funding money. So some experts that decided to help us. They liked the technology. They had experience in software. They had experience in exiting the Italian company to US companies, software companies. So basically we hired those, but we didn't hire those guys just paying them, but just promising some shares in case of success on a specific period of time. So at the end of the day, what we tried to do was to give an Italian company more a US flavor. This was the only way to really speak with the real investors. I remember in 2011, 2012, basically it was every 3 weeks in US and pitching to a lot of investors. Probably I did, I don't know, 60, 70 pitches to US investors. And it was almost impossible to do it if I was not able to have someone in US helping us doing it, because it's a cultural thing, but it's normal. Please. Well, this is a joke, but anyway, East versus West. So we always been discussing. So I lived in US, I lived in New York for a long time. I lived in California for 1 year. What we are going to do? Raising money in US, it means we go to New York, we go to California. So at the end of the time, we ended up in Connecticut. Don't ask me how, but Connecticut is not so far from New York, so for me was great. But whatever the money is important. But for example, now our headquarters is in the West Coast. For a technology standpoint, for us is important. It's much more important to stay there because we are in close contact with the real technology. But at the beginning, we were close to the money. So our headquarters was in Connecticut, in Stamford. That is, it's not Stamford in California, but is a place close by. I think 1 hour drive from New York. So there is also another point. Be prepared. If you are raising money from US people, they will ask to bring all the IP there. And again, it's a matter of governance. It's a matter of the delivering products and managing taxes. But at the end of the day, you can do it. And don't be scared. It is a cost. It is a cost that you can negotiate with your investors. But if you think about the exit strategy, is better to exit a company that has the IP in US than a company that has an IP in Italy for different reasons, because the way company exit in US are different. So you can get better evaluation in US. You can skip this. So another thing that I like more than having a pipeline description, detailed pipeline description in a slide deck for investors, I like it a lot. So you're asking for 15 million. Okay. Don't be shy. Again, think great. If you put in your list of things, your use of proceeds, also the idea to acquire something. So acquire a competitor, acquire technology. So start thinking about merging. So the investors like those things. So like the fact that you are thinking big and you are ready to scale also in this way. Okay. So of course, if you're raising 3 million, probably there is no money enough for buying a small company. If you're raising 10, 15 million, you can even think, okay, I would like to start this market buying this company. Or there is a plan. The plan of acquiring is kind of interesting for investors, please. So connected to the customer, don't be shy. If the investor comes, I remember, but the investor that put money in our company, they did 3 meetings. They did 3 meetings with existing customer and 5 meetings with lost customer. So they went to the customer that we lost, and they went there asking why you're not using any more, Decisyon. So what happened? Why you're not using any more action? So be prepared that be prepared that also disappoint. So even disappointed customer or customer that you have lost for you can lose customer for different reasons. Because they don't have money, because you cannot manage them, or just because there is a bad relationship between your account and the customer itself. But again, this will happen. If you find smart investors, they will go ask for meeting your lost customer. So if you have churn in your company, so you're losing customers, anyway, you have to try to leverage them. Okay, so how complex it was. So again, sorry if I didn't have the real agenda, but I tried to put a lot of hints. It's easier. It was easier for me. I kind of confused when I'm speaking of those things. I'm not able really to organize my thoughts properly. But anyway, what happened? It took 18 months to raise money. So to raise 18 months to raise the first round of the $50 million. So the first $50 million we raised, it took 18 months. Of course, raising the others was easier for different reasons. We did more than 30 live pitches in US, but probably it was more because I did a lot of pitch also online with our team, our US team in the US. I spent a lot of time in US. That was not actually bad because I was not married. Now I have 2 children, so it's kind of difficult, but it's. I will do it again if necessary. Again, last point. Don't forget that you have to sell. The more you sell, the better it is. The more you build your pipeline, the better you can negotiate with your investors. So if you're raising money, don't forget you have to sell before. Okay, so sell, revenues, or pipeline, sales pipeline, let it grow. Don't forget, don't focus too much on investment, otherwise you lose the control of the rest of the company. Okay, I don't know, it's 11, so probably we can get questions or, okay, as you want.
How many rounds did you raise?
2. Yeah,
First one was
15 and the other 32, and then some other.
investors.
No, the first investor was a private equity fund called Axel Johnson. That is not Axel, the California one. And the second one was still this lead investor, and another one from New York. But both private equity funds. That, yeah, we can discuss a lot about having venture capital or private equity fund in your list of investors. There is a totally different way of thinking. There are good and bads.
Which stage of your life did you do the IT in the United States?
At the very beginning. So it was a requirement of the first investor. So the first investor say, I love a lot of your technology, I love you, but move everything. We took some lawyers, we understood the cost of it because you have to move a lot of, so it depends on how big your IP and how much revenues you're generating. So there is a cost associated to it. And so part of the investment was used for that. So yes, everything was needed for doing it. So just after raising the money, I think that investor hired something like 15 people in the US. Now we have 5. So sometimes it's not necessary to have a big group. No, at the beginning it was not useful. In fact, there are 5. If they were useful, they were still 15, probably 20. So getting traction in the US is very expensive. You need a lot of people. Moving the knowledge you have here and move it there is not easy. So probably we have underestimated the complexity of the market and the technology we had. So we started like mavericks, and then we decided to reduce the scope, and now we are focused more on on Europe. And by the way, all the people that now works in US is focused on managing the partnership relationship with GE, with AWS, and all those big companies. So more business development part, less commercial. Any other question?
Your revenue when you raised it?
I think it was between 3 million and 5 million. And the market space was very interesting because there was this big guy raising of industrial Internet of Things. It still was not IoT, was not called like this, but you know, Gartner was already speaking about this, and we were already working on all these projects. So the market space, the multiplication of the revenues was high. So we've been able to have a pre-money evaluation quite high.
So you're saying about the difference between private equity and VC.
Yeah, so VCs are more used to invest in a lot of, so they play more with the logic of big numbers. So they invest in 20, 50 companies, and they know someone will die soon, and so the numbers are different. A private equity fund has a lot of money, and they are used to invest in very consolidated companies that, you know, with a lot of millions of investment and with all, let's say, a stable market, a stable revenues, and they are used to very small growth. So they're happy if something grows 5-10% per year. So of course, as you can imagine, you are a startup, so you want to grow fast, and you want your investor to look at you as you're growing fast. And the approach is different. So they are not used to get a lot of risk. Venture capital is a venture, so it's a risk. And so it's difficult to convince them to have a risky approach in the market. They prefer to see grow the company, but not in I don't know, 2 times per year. So this is a different approach to risk. No. All private equity, of course, there are minor investors that are from US that are let's say angels or angels with a lot of money, but yeah, private equity, nothing else. But it was a private equity fund that was trying to start up a new venture capital on technology. By the way, usually those private equity are all, at least our private equity fund was not had not experience in software technology, but oil and gas pipeline, whatever. So something very you can touch and you can feel the smell. In our case, it was software, so it was different kind of approach. So again, good and bad things. A lot of money available, but a different way to think about how to approach risk associated to a startup.
They help in the growth process, business-wise, bringing new customers. No.
Probably this is another thing that probably I don't have enough experience to say. Okay, I don't have the A/B test to say. But I would expect that the venture capital, given the risk approach, will help you to get more customer. The private equity was saying, you know what, go. I don't give you. So I want you to grow organically. So the answer was no. We didn't get any introduction to customers.
But how did you start this live business? How you get contacts of this?
So these people that we hired from US, they were very well connected. So they have helped us creating, like you're doing right now here. So they helped us to create the story, to create the information. Yes, we hired advisors, and as I mentioned before, we promised them shares in case of success.
And how did you find these advisors?
So the interesting thing was there are a lot of software companies in Italy that you don't know, like I don't know, I can cite one, Tagetik. they raised money. They sold the company to big corporation, and there were investors there, U.S. investors or German investors. Anyway, there are a lot of there are a lot of companies, and there are a lot of people that are very interested in U.S. companies. So we found those people in some events, and then after listening their story, they helped us. They were based in U.S., of course.
Before you went to pitch in the US, did you try the fund? No, never. In Europe. Never.
Neither in Italy and directly in the US.
Would you suggest?
You can raise more money in the US than in Italy for sure. Now in Europe, imagine that we raised money in 2012, so it's 6 years ago was totally different, the market. In Italy for sure, in Europe too. So now Germany, UK, France, also Italy, you can raise 10 million in a round. But before, for what we were envisioning, so to be a big corporation and raising 40 million, the only way to go was to go to US.
But at that time, at the time of your first round, your clients were European, right?
Well, yes, definitely. Italian or European, or started from Italy and then developed in other countries in Europe.
And what was the reaction of US investors?
So one thing we did, they asked us while doing all those activities in raising funds, they asked us to be in US, try to sell in US. In fact, we to create a pipeline in US. So of course they like if you have one foot at least in US and you have one customer, you have one partner, something that they can leverage for the future.
Did you, at the time that you got the 15 million, did you have the client in the US?
No, but we had a pipeline.
Oh.
We had something like 15 companies in list that were interested to buy our software, small and big companies. And the other thing we did, we started from our multinational customers here, and we tried to scale up into the company. So for example, I don't know, J&J has headquarters in US. So we tried from here to go in US. So this is one of the things that we did. Or for example, FCA was one of our customers. We tried to go to the FCA in the US.
Thanks, Cosimo.
Anyway, I'm here, so you can